And we're joined now by our panelists, Jay Bryan and Colin Read, and a familiar face here at the Roundtable, Bill Owens, who was the host of this program until 2009 when you became the North Country's Congressman. You were retired just a couple of weeks ago, as a matter of fact. And we're going to talk about some of the many issues you've worked on in just a few moments. But first, I guess the best place to start is what's ahead for you now, and what are your plans?
Well, I was asked that question Sunday night. Someone asked me how retirement was going. This was an email exchange, and I said, well, the first 48 hours have been great, but it ends tomorrow morning at 8 a.m.
You went back to the law firm?
I went back to the law firm on Monday morning. And I am going to continue the process of reintroducing myself into the practice of law again, which should be exciting for everyone. I also have a relationship with a law firm in Washington, where I'm going to be a senior advisor, largely focused on Canadian trade issues. I'm joining the Woodrow Wilson Institute, the Canada section of that organization, which will continue to provide me, I think, with a lot of information about the Canadian-U.S. trade relationship. And I have one or two other irons I have in the fire as I'm attempting to get to 5 part-time jobs.
So you're going to continue your work promoting cross-border trade and
Absolutely,
and
I hope that communities in the district call on me to give and assist in that area as well.
Border issues were obviously a big part of what you dealt with over the past 5 years. What were some of the biggest issues you dealt with as far as our economic ties with Canada and border issues?
Well, you know, as we focused on the border, what we were always working towards was to make sure that we had a reasonable flow to goods and people, coupled with the security issue. And those are hard things to manage at times. But I have to say that my experience with the folks at CPB and CBSA in our sector, in any event, were really excellent. They worked hard to be reasonable, and I think did a very good job. Now, that doesn't mean you're not going to get complaints from time to time. You clearly are. But that's not how you have to judge it. We have a very high-functioning system locally. They have excellent management at the border, and I think that the folks who work there work very hard at trying to make sure that we get people and goods back and forth across the border.
Over the years, you worked to upgrade border facilities, in some cases looking at either consolidating or sharing facilities, but obviously Champlain was started before you were in Congress. That was finished. Now Lacole on the Canadian side, a big modernization plan there, but along the New York-Canadian border, a lot of focus on improving facilities.
Right. We have 13 border crossings in the district, the greatest number in the United States in any single congressional district. A couple of those closed on both sides of the border, and clearly what we need to be doing is using technology and cooperation between the Canadian authorities and the U.S. authorities to make sure that people can still cross at those locations, even though you may not be able to do all types of crossings. In other words, you may not be able to bring a tractor-trailer load of goods across, but you should be able to move at least people. You also have the issues related to public safety, fire, ambulance, police. Those are very important in many of those smaller communities, that if they have a fire, that they can call on the Canadian community, which may be the closest thing to them, to come across, and going the other way as well. So those are things we've been trying to work our way through.
When it comes to border issues, what would you say was the greatest accomplishment during your 5 years?
I think that the introduction in Congress of the importance of Canadian trade and the opportunity to really educate and explain to my colleagues, which we did through the Northern Border Caucus. We ran a number of events that were DC focused, where we had many experts come in and talk about it, and we got lots of staff from other congressional offices to come. And we felt that that was very important to educating people about this relationship.
progress made in getting customs agents at the
We also
Central
got
Station
a
in Montreal.
significant, we got a significant addition of customs agents locally. We
cover the
also
border.
had the movement to put customs agents in the railroad stations in Montreal. So we're moving in the right direction in a number of ways.
The hope there, obviously, to speed up the trains going from
That's right.
Montreal to Albany and then on to New York City. The biggest disappointment that wasn't accomplished, or that you left office without being able to accomplish?
One of the provisions of the agreement between the President and the Prime Minister was the Regulatory Cooperation Council. That to me is one of the biggest impediments to smoothing out trade. What we're really talking about is what are the qualifications that a carburetor has to have in the United States versus a carburetor in Canada. We want to make those uniform so that people can use the carburetor in both places. What happens now is you wind up with one type of carburetor in Canada and another type in the United States. Those are the kinds of things that don't make any sense, and we need to be working towards.
Your hope is that may help businesses on this side of the border do more business in Canada if
That's
you
right.
can.
Because then you could do manufacturing here and bring it up to Canada for inclusion in a larger piece of equipment.
Well, let's move on to the new year. Welcome to you all, and bring everybody into the discussion. The new year, 2015, it's starting out a little bit bumpy on Wall Street. Over the past few days, we're taping midweek, but the early part of the week, we saw the Dow fall several hundred points. Is this just early profit taking earlier in the year, or are we seeing other factors at play here, such as the falling oil prices?
Well, I think the oil prices is not necessarily the price of oil that's the problem. It's the volatility in the price of oil, the very rapid drop that is unnerving the marketplace right now. And, it's ultimately destabilizing. And whenever we need to accommodate some sectoral shifts, then the market is going to respond pretty negatively.
I think what happens is that, first of all, exactly what Colin said. If you have a sort of a moderate drop in the price of oil that occurs over a number of months, really almost nothing but good. It's tough on some energy companies, but even they have time to adjust, and it doesn't cause any panic. When you have an absolute plunge, I mean, you lose half the price of oil over a matter of months, it's frightening. And the last time it happened, we were going into a worldwide economic crisis. People don't seem to take into account the fact that but the last time it happened, it was because demand fell off a cliff because the crisis was starting. This time it's not happening for that reason. It's happening because the United States has actually been incredibly successful in finding moderate priced new sources of oil through techniques like fracking. So it's a huge success story in a sense, but it still has really, really destabilized the price of oil, because unfortunately it's coming at a time when really big chunks of the world economy are not doing well. The Chinese economy is still growing, but it's slowing. And the European economy looks like it's just kind of stumbling to an almost dead halt, and maybe about to go into another recession. So kind of a bad combination of things, a lot of new supply without much demand growth. And what the market does is looks ahead, and you see a great big move in the market, because the market tries to figure out what this is going to mean over the coming 6 or 12 months and get out of the way of that all at once within a matter of days, because it could mean that there's going to be a huge drop in investment, for example, by energy companies, which will be a real economic impact.
This week, it's dipped below $50. How low do you think it'll go before it rebounds? Will it hit $40 again?
I think it could for a short period of time, but it really starts flushing out some of the more elastic parts of the marketplace. The supply isn't monolithic. There's some that can go down quite a bit lower than that. There's others that are very price sensitive, but also have wells that might only last for a few months or a couple of years. So it really affects the drilling decision of mostly shale and small operators in the U.S. I think can be most profoundly affected.
So immediately we could see impact in North Dakota, the Bakken oil fields, where there's just been the oil boom that we've all seen, the amount of oil coming from there, coming by rail across Canada through the Champlain Valley and to refineries. What impact does that have on the overall economy if all of a sudden the price dips so far down that oil production slows dramatically or even comes to a near halt?
Well, like we mentioned before, I think it's just destabilizing. And, if we had long enough to cope with it and restructure based on more of a permanent sense of lower oil prices, that'd be one thing. But but it's very difficult to plan if you also anticipate that perhaps in 18 months prices might be back up to $70 a barrel. So it's that uncertainty that I think is really troubling decision making.
As we get into the spring that the prices are going to rebound, that they're going to creep back up?
I think most economists expect that the prices will stabilize and probably come back up again. And I think that'll probably be a good thing as long as they don't shoot back up over $100 a barrel or something, because once again, I think Colin's put his finger on it. It's the volatility, it's the extreme uncertainty. There's always some uncertainty in the business world, but the extreme uncertainty that you're seeing now means that you don't know what's going to happen, whether you're going to start seeing marginal oil exploration and development companies going bankrupt, whether you're going to see financing freeze up for all kinds of new exploration. And that's very, very worrisome to people in markets. On the other hand, the good effect is much, much bigger than the bad effect in a country like the United States, because the effect of consumer spending, getting effectively a big shot in the arm from what really amounts to a kind of a big tax cut, is much more important than the effect of having some marginal oil producers pushed to the wall. A little different on the northern side of the US-Canada border, because the oil industry in Canada, even though it's not as big as the American oil industry, proportionately within the economy is much bigger. So there's going to be a big, big effect in provinces like Alberta and Saskatchewan and Newfoundland, and quite a substantial effect on the value of Canadian exports and the value of Canadian GDP growth. It also will be offset by benefits for consumers, but there'll be a bigger downside than the upside, at least initially. Over time, even Canada will do okay, because the United States is our biggest customer, and as the United States benefits, will be pulled along a little bit.
And this has been a real boom for consumers, obviously.
It has.
Putting money in their pockets, that's helped the economy.
Yes.
But even that has a little bit of uncertainty too. You know, Ford is coming out with a new F-150 truck with an aluminum body, quite a bit more lighter, more fuel efficient, but more expensive. And truck sales have been increasing quite a bit as the U.S. economy turns around. So if you're a contractor, do you decide to spend a little bit extra money to get that more fuel efficient vehicle when you see gas prices going down to $2, $2.50 a gallon? Maybe you say, well, I'm not going to make that investment right now. But then if you thought, that's right, but if you thought the prices are up to $3.50 or $4 a gallon, would be a no-brainer to make that bigger investment.
Right, and for us here, obviously, price is still $2.50, $2.80 here in the Northeast, but there are dozens of states across the country right now where gas is less than $2 a gallon. We were in the Carolinas over the holidays and paying $1.79 a gallon, and transformed back in time down there. But you're right. This week, with the new Congress taking over, there's already talk that the Senate's going to move ahead quickly and try to vote by the end of the week on the Keystone XL pipeline and getting that pushed forward. I think the president's already threatened to veto. But do you think now that with the Republicans in control of both the House and the Senate that pipeline project will get approved?
Let me just make one observation on this conversation. If we look at what has happened, particularly to Russia, Iran, and Venezuela, what has been demonstrated is that you can use sanctions in a very effective way. This is an economic issue that has played, I think, to the administration's hand here because of the enormous pressure it puts on those two countries. The other day there was an announcement that they're very close to a deal with Iran on nuclear proliferation. Why would that happen? Well, the pressure, I think, has increased dramatically on them economically. Now, is it clear that this is something which we directly helped to facilitate? Not directly, but by putting yourself in a position where we had this tremendous growth in oil production in the United States, we set the stage for this to happen. No one saw it coming, which I find incredibly interesting, particularly the oil companies. I find that just mind-boggling. Go back to Keystone for just a second. I think that they will pass it in both houses. And as you know, I would have voted in favor of it. I think the president will likely veto it and try and leverage that against some other major issue. I would think if I were him, I would play it against immigration. and try and force the Republicans to put forward a rational immigration bill that both Democrats could vote for and Republicans, and put ourselves in a position where we could get something that the president wants and something he's less enthusiastic about passed and into law.
Is there less of an urgency in many people's minds for the Keystone XL to be passed now with the falling oil prices? Do some people see that there may not be as much of a demand to get that pipeline up and running?
I'm not sure that actually goes into people's analysis at this point, because I think everyone thinks this is a short-term blip. Whether it lasts 6 months, a year, year and a half, it's still short-term in the big picture. So the pipeline is necessary, in my view, certainly exacerbated by trains rolling through with 100 or more cars filled with oil on them. That cannot be safer than a pipeline. So I think eventually it gets done, but I think it gets done in the form of a trade.
Before we leave oil, you mentioned Putin. Has this, with sanctions, with the tremendous drop in oil prices, has that slowed Putin's advance into the Ukraine and helped deal with that situation?
Well, I think it has. I think it's forced him to focus on the Russian economy and pull back and be introspective rather than looking outside of Russia. So I think that's been politically a tremendous benefit. And as I mentioned with Iran, same situation.
We were talking about auto sales. Auto sales for most companies, I think Ford was flat, but most everybody else had great months. And Honda and Nissan, I think, had record months. So car sales are doing well. A big part of that probably is driven by people happy about the lower gas prices, and they're out shopping for new vehicles.
Consumer sentiment is high as well, and all the companies are realizing they have to come up with a lot of different models. They've been withholding new models up until recently, but there's really a deluge of new models in the European, the BRIC nations, and the U.S. as well.
And it's not just that the fuel is cheaper for the cars, but people just have more money in their pockets to make those car payments.
And you mentioned the Ford F-150, the new one made of aluminum. I know that there are hopes resting in Messina at Alcoa and elsewhere that this is the wave of the future, that more aluminum may be used in the manufacture of vehicles.
And it almost certainly is. All the major car companies are looking at new technologies. Yeah. Alcoa is also really quite advanced in these new aluminum titanium alloys that are stronger than steel, much lighter weight, and Alcoa is a world leader in that new technology.
And obviously folks in Messina are looking at the idle East plant and hoping that as the economy improves and maybe aluminum prices go up, that plant will be back up and running and undergo that modernization that they're still waiting to get the final word on. With the auto sales up, employment up, 6-year high, and the economy looking strong. A few blips, like the factory orders being down for several months in a row. But overall, the strength of the economy, looking good as we head into 2015.
Better than anticipated, I think, in recent months.
I think the U.S. is really pulling the rest of the world up by its bootstraps right now in the strength of the U.S. economy.
That's exactly the picture that we have on my side of the border, and we're very glad to see it happening, because there were all those years when everybody knew that the United States had the potential to lead the world in growth, and after the initial stimulus program petered out and was replaced by a lot of squabbling and a lot of I think self-destructive austerity at the state level and the federal level, it was just so discouraging to see that our most important trade partner by far couldn't get it together. And now enough time has passed that the economy has basically swept aside these political problems and is moving ahead on its own.
Do you think that the decline in factory orders could be impacted by the decline in other currencies versus the U.S.? In other words, the strengthening of the U.S. currency, therefore making exports more expensive?
I don't know how much of the ISM factory order series comes from foreign factory orders, but that certainly sounds like a plausible theory that could be part of it.
Yeah, I was thinking more that an American factory might not order equipment because they're afraid that their export may become more expensive and therefore decline.
The American dollar has been the unquestioned global champion of all currencies for the past year, and I think there's very widespread expectation that it'll keep on being that. So if you were running factories in the United States and in other countries in the world, you would certainly want to be thinking about shifting some of your production to those other factories. I don't know exactly how they divvy up factory orders with respect to where they're going to produce the articles or where the orders come from.
Canada is very much of an export-oriented country. They're very conscious of the exchange rate, and Canada will almost celebrate a low exchange rate because they know their goods are much more competitive, whereas in the U.S. it's more of a self-contained economy.
Yes.
We don't quite view it in those same sorts of terms.
It's almost like a win-win. That's right. The United States is affected by the strength of the currency, and it's a small negative effect. But thank goodness it is a fairly small negative effect because the U.S. economy is still so immense that it can almost shrug off weakness in global markets. Canada can't do that. And it's not just that we almost celebrate the decline of the currency. I think it's been very clear that the governor of the Bank of Canada has been kind of rooting for more weakness in the Canadian currency for the past year or more. As a consumer in Canada, I'm not super happy about that because that pushes up the price of everything that is imported, and it pushes up the price of travel outside of Canada. But I can certainly see that there will be benefits for Canadian manufacturers.
And when we talk about the economy and the growth, you hear some predicting growth as much as 5%. Do you think that's possible in 2015?
I don't think it's possible, but we can have a quarter that we might have 1.5%, so they extrapolate and say, well, it works out to 5% annual. But I think we'll have, if we have a couple of 1% quarters, that'll be good, and then a couple of 0.75% quarters. I think a more realistic number is between 3% and 4% overall growth.
Those are the numbers I'm saying, and those are darn good numbers.
Still very good.
You look at any other country in the world, in the industrial world, and I think it'd be hard to find one that wouldn't be just delighted to be in the position of the U.S.
Well, let's pull out the crystal ball then and look into 2015. The stock market obviously hitting new highs in 2014. Does the new year bring more of the same? Do you think it continues on this pace?
Jay and I have discussed that in the past. I think it can actually continue. Price-earnings ratio for the stock market is probably a little bit on the high side, but when you look at the increased pattern of earnings over the last couple of years and you extrapolate and estimate that there's going to be growth of earnings going forward, I don't think the price versus future earnings really is that far out of line. So, and some people will say it could even grow a little bit more. I don't think we're going to hit 20,000 real soon, but 20,000 is definitely in the horizon. I think we're more likely to go up a little bit than a serious retrenchment.
I wouldn't contradict Colin, but I'm more nervous than he is because I tend to look more at the cyclically adjusted price-to-earnings ratio rather than the forecast one. That's going back 10 years, so you go through a couple of economic cycles. Of course, we've had some bad economic cycles, which tends to make that ratio look higher than it otherwise would. So no measure is ever perfect, but using that cyclically adjusted ratio, which is used by people like Robert Shiller at Yale, who did a very good job of forecasting the tech bust, prices do look pretty high. Of course, prices can be high and they can keep on going higher if we've just come through the valley of despond and we're finally moving into a period of sustained growth. So I'm very much rooting for Colin to be right.
And with the markets doing well, with unemployment the lowest it's been in years, does it come to a point now where there's increased pressure on the Fed to take a look at interest rates? And do you?
There's no doubt, but that's already been factored into the market. Everybody assumes that the Fed is going to not necessarily tighten, but get to a more realistic level of the discount rate. And that's actually good too. The industry we forget about sometimes is the banking industry, and the banking industry has really had a hard time making its margins over this great recession. If we can get back to interest rates that are still very good, 4, 5, 6%, I think that is just much more sound. Just like oil at $60 or $70 a barrel is much more reasonable.
Yeah, and it seems to me it'll be a sounder, better balanced economy if you have interest rates that are above almost zero, where they are now. It's interesting to me that there was, every once in a while there'd be this panic about whether the Fed was going to raise rates. Back long before the Fed was ready to raise rates. And now that we're right on the edge of the Fed actually being likely to raise rates, there doesn't seem to be any panic about it because people realize that if you have a strongly growing economy and you have exceptionally, unreasonably low interest rates, it's a healthy thing for rates to go up a little bit.
And speaking of banking, interest rates, does it seem likely that as we get into the spring and summer that Congress is going to phase out the Export-Import Bank? And is that tough news for manufacturers here in the North Country who have relied on it for a number of years?
I think that there's certainly a great threat to that happening. I think it would be an enormous mistake. I think that the people who support terminating the Export-Import Bank do not understand what it does, do not understand that it returns, in many cases, billions, if not hundreds of billions of dollars to the Treasury over time. This is not something which is a drain on U.S. taxpayers. This is in fact an entity that is really helping, and the argument that folks are making that this is corporate welfare to Boeing and companies of that magnitude, GE, does not really play out when it's subject to analysis. So I'm hopeful that they will not do that, but I think it's 50-50 as to how that plays out. The problem we have here is that there's nothing the president can do about it because it's set to expire, so it's not like a piece of legislation he can veto. This will happen by no action.
And when this came up last time around, last fall, last summer, we did hear from manufacturers in the North Country that say they've used it and it accounts for a good chunk of their business overseas and for jobs here in the North Country.
Right. I mean, it really dramatically impacts exports. And if we're going to grow the economy, it has to be an economy that is going to grow incrementally on exports. It's not going to grow incrementally on consumer spending. So this is critical, and the people who are against the Export-Import Bank, in my view, really lack any basic understanding of economics and how the business sector works.
I think they view it as a competition for the private sector rather than an institution that really increases American competitiveness.
Absolutely.
It would be an interesting effect if it were to be terminated. I agree completely with Bill and Colin. As a Canadian, I can't help think Canada might almost benefit because a lot of other manufacturing locales whose competitiveness has already been improved versus the U.S. by the big rise in the U.S. dollar's value will find their competitiveness increased yet again because Canada's not going to end its equivalent government export financing agency, nor will any other major industrial country. So companies that have already moved a very substantial part of their manufacturing capacity outside of the United States will have a very strong incentive to move more.
That's an excellent point, Jay. Excellent point.
Yeah.
Let's pick up a little more on what the new Congress may be doing now that you've left. Do you think tax reform will be a priority for Republicans?
I think they will attempt to make it a priority, but it will implode on its own weight. As Dave Camp discovered when he began that process, everybody he went to had a favorite deduction or credit that they wanted to maintain, but they wanted a lower rate and they could not get there mathematically. So I think until someone is prepared to really step forward and take a very hard position, which I don't think anyone in Congress will do at this point, I don't see tax reform happening. You may see some incremental things occurring, but I don't think you're going to see major tax reform because you've got to get the public, or at least the large institutions, in a position where they are prepared to accept a netting out, if you will, to get to a lower rate.
And I know that one of the frustrations for you was the lack of compromise, the gridlock that you saw for a number of years in Washington. With the Republicans controlling both the House and Senate now, do you see that easing at all? Do you think that the president will now be able to work with Congress, and that in advance of the election year in 2016 that you'll see Congress accomplishing some things more than has been accomplished in the past couple of years?
Well, you would like to think so. I'm not sure, however, that the Republicans will be able to get their own house in order. If they can't, they have fewer moderates like myself to rely on for votes on the Democratic side. So they, in a sense, have increased the burden of passing what I would call reasonable mid-ground legislation. So I think they're going to have a very hard time with the 60 to 80 people on the far right and the 6 to 10 in the Senate. I think they're going to have a great deal of difficulty getting legislation out that Democrats can vote for, because those who are left are further left than many of the folks who retired or were beaten this year.
Well, in the short amount of time that we have left, New York, just before the holidays, the governor announcing that New York would continue its ban on hydrofracking. The ban has been in place since 2008, I believe. This doesn't truly impact the North Country, as far as there wouldn't be hydrofracking in the Adirondack Park or up this way. But the overall economy of New York, is this a blow to the southern tier? And would this have been an economic boon to the state? And do you think the governor made the right call here?
Go ahead.
I think he made a political call. I think.
And that surprised you?
There has been problems with that industry, but almost invariably there are failures in the concrete job in the well setting once it's been drilled. The same sort of problem was in the Macondo BP disaster in the Gulf. These are technological problems we should be researching, much more vigilant and regulating. I think to just simply ban something just doesn't make an awful lot of economic sense, and does really impose an awful lot of hardship on a number of people that have been hoping to revive their economies in the southern tier.
New York, the biggest state in the nation to ban it. A lot of other states allowing it, but obviously the concern raised that they don't know the impact that the chemicals that are used are having on public health, and beyond that, has hydrofracking in other states proved to be a problem, or has it actually been an economic boost without a lot of negative?
Well, for natural gas, the hydrofracking for natural gas has allowed the U.S. to become a major player in natural gas. I think there's an estimate of hundreds of years of supply. That's brought energy costs down substantially. There's very real technological health and regulatory problems to worry about, but it also has really been a boon for the energy sector, and since the energy sector really drives much of manufacturing, the overall economy as well.
And in Canada?
They've got the same concerns and the same fears in Canada about fracking, very, very controversial in Quebec and across the country, I think, outside of economies like that of Alberta, which is based so heavily, and Saskatchewan based so heavily on the petroleum industry. But the price of gas and the massive surplus of gas in the North American market right now is such that I don't think that there's an enormous amount of pressure to change any of the restrictions on fracking real fast.
We may see the governor in the coming weeks go back to the gaming commission in New York and maybe try to get it to reconsider its decision not to award a casino to the southern tier after the southern tier was dealt this blow when it comes to hydrofracking. The gaming commission did grant 3 licenses. The closest casino would be in Schenectady along the Mohawk River, but New York adding potentially in the coming months 3 new casinos. Is there an appetite for all of these casinos? We're seeing in other states where there isn't as much of an appetite as many people thought there may be for casinos.
It's a shame, though, that we're putting all our eggs in a basket. It's really just simply a zero-sum game. Gambling is just simply transferring from one individual to another, with the state and the casino operators taking a small cut. It's not like we're producing a better widget or cheaper cars or expanding our GDP ultimately. So it's a shame that we're looking for economic solutions that are of that nature rather than something more substantive.
For areas though like Schenectady, which has gone through many hard years, they're having a bit of a renovation with Proctor's Theater and part of the downtown. But for an area like Schenectady, does this really provide an economic shot in the arm?
Well, if you look at the reports from the casino industry, they're telling you that revenue is going down dramatically. So why would you think by adding more supply that you would increase the revenue stream? And that's effectively what you're doing. You're adding more supply, more
Because just about every
casinos.
state has casinos now.
So if revenue is going down, how do you analyze this to come up with a proposition that this will generate more revenue? I find that a little bit illogical, but this is another one of those things that people get latched onto, and they're not doing the kind of analysis. Now, maybe some of the people granted licenses ultimately will analyze this and say, we're not going to build, because in fact, we don't think we can make money when we have this declining revenue literally across the board.
And of course, it's a race to the bottom too. I mean, if New York thrives because of this temporarily, it's only because they're taking the market away from Atlantic City that's diving. So it's just, whose turn is it next? It's like Bill said, this isn't a well thought out national industrial policy. This is a kind of catch-as-catch-can at the expense of some other state ultimately.
The casino has been a boost, though, to the North Country, to the Akwesasne, providing jobs and economic benefit to the region.
And I would argue that's because you have limited supply in the region. So you are in a position where you have limited supply. So that sort of makes sense to me. But as you mass supply to service, the, sort of, if you will, the Northway and South into New Jersey, and you got all those casinos there. You've got casinos in Connecticut that are within an hour's drive. You have Turning Stone. I mean, you have a huge supply. I don't know how that works.
Okay. And obviously competition to the south now for the casino and the Akwesasne Casino, competition to the north near Ottawa. And so, I guess the question is how long it sustains, how it's doing right now.
And if you look at the social impact alongside the business impact, then it really seems to make no sense, because the legalization of gambling, if you go way back, was heavily influenced by the notion that there was a certain fixed demand for gambling. People wanted to gamble up to a certain point, and if you wouldn't let them do it legally, then they would go and do it illegally. And so some casinos were opened and some lotteries got started and so forth, and people had an opportunity to gamble. And as Bill and Colin both pointed out, there's not a big growth in that demand. The demand is now being satisfied to some extent, and I don't think you really want to try and make demand grow. Although once you've got the demand being satisfied by a public institution like a publicly owned casino like we have in Quebec, then you do have some advertising that encourages people, and in the States, to go out and play the lottery and come to the casino, which to me is insane, because there's some social evils that go along with having casinos. So it seems to me that if you satisfy the demand up to a point, and you can see that there's not a heck of a lot of demand left, there really is no business case to be made that you're creating something valuable that'll provide growth of some good product or service going into the future.
And that is going to do it for our business edition for this month. We want to thank Colin, Jay, and Congressman Owens for joining us, and we thank you for watching. For all of us here at Mountain Lake PBS, I'm Tom Halleck. We'll see you next time.